how does someone qualify for a solo 401k? And what are the advantages of solo 401k? Like why people do these things?
Yeah, for sure. Absolutely. So, as far as the solo 401k is concerned, right away, just to differentiate that type of account, there's probably, eight different types of retirement accounts an individual can actually leverage on the self-directed side. You just hit one of them right on the head, the solo 401k, and that's a really popular self-directed retirement account for people who are small business individuals. So you hear about self-directed IRAs. Those are probably more common because ultimately every individual could qualify. However, the solo 401k was created years ago.
Hello, everybody. This is Sanjay Hegde, your host. Welcome to REI Secret Spill, Fast Track to Riches. Today, I have a special guest with us, Joel Landon. Joel Landon serves as the Director of Revenue and Partnership Growth at Heritage IRA, where he leads the company's national expansion through strategic partnerships with CPAs, RIAs, attorneys, investor communities, and alternative investment professionals. He has over 15 years of experience in financial services, business development, and high trust business to business relationship building. Known for his clarity, consistency, and results driven mindset, Joel is passionate about helping professionals and investors unlock the full potential of tax advantages, retirement vehicles like self directed IRAs and solo 401ks. Um, Outside of work, Joel is devoted husband and father of four daughters, and he brings the same commitment to legacy and stewardship in his professional life as he does to his work at Heritage. So, welcome, Joel, to REI Secret Spill, Fast Track to Riches.
Happy to be here, Sanjay. Thank you so much.
So, no, thank you. So, Joel, the way I look at it is this: when I started off with investing passively in, you know, multifamily as well as self storage. The first person who got me into it was through self-directed IRA.
Oh,
So,
wow.
and I did not know anything about it until then because to me it was all about investing my money in buying rental property like properties, single family homes, and then renting it out. And that was the only thing I had in my mind at that time. But then there are limitations as to how much you can really do, right? So one day I was just listening to somebody and I got to know about self-directed IRA. So tell me a little bit more about it, Joel, as to what made you first get into this business and what is self-directed IRA? Because I know a lot of people don't know what it is all about.
Yeah, absolutely. I appreciate that, Sanjay. And I love hearing that a self-directed retirement account is essentially how you started investing passively. And your story is actually really synonymous with a lot of other influencers and professionals and even everyday individuals that are working a W-2. So it's really exciting to hear that that same synergy exists between us. Where I started in this space was about 7 years ago when I went from very institutional type of finance to more alternative finance, if you will. And I believed my whole career during the traditional institutional profession and experience that there was really only one way to invest. And it wasn't until I started really building relationships with people outside of institutional and more an alternative. And I was introduced to a company based out of Colorado. They're in banking services, and it essentially allowed me to really go full force and like head first in this alternative asset space to make an influence with investors. And so about 7 years ago, that's when I kicked off this career. And I've worked for a couple of firms since helping individuals really capture retirement dollars and invest it in alternatives. And even beyond that, I've helped individuals leverage these tools, not just to roll over existing funds, but to also use it as a tax tool, like a tax strategy. And we'll talk a little bit about that today. But for those that want a refresher on what does it mean to actually self-direct, or what is a self-directed retirement account, I'm sure some of you listening today are either experienced with it. Maybe some of you are actually doing it. And I'm sure there's going to be folks that have no idea what it is. A self-directed retirement account is simple. And I always like to start with the idea that traditionally, a retirement account is available to an individual to make contributions on an annual basis from their income. Most people familiarize that with a 401k that they participate in with their W-2 job, or maybe they have an IRA that they've been contributing to, or maybe a family member set up a Roth IRA for them when they were younger and they've been contributing to it. Those accounts were ultimately designed for a couple of things. First, to benefit the participant so that they could defer some of their taxable income, but also take some of that money and grow it tax deferred or tax free. We'll talk more about that as we go on, but that's traditional. That's very normal. That's what most people are familiar with. And there's trillions of dollars baked into that system. And I don't want to say, unfortunately, Sanjay, but ultimately, those dollars that are invested in the traditional retirement system have only really one place to be invested or to grow, and that's the traditional stock market. It's the capital markets that we're all familiar with. And that is a phenomenal place to grow your retirement. A lot of people have made millions upon billions of dollars in the stock market playing that game. And then, of course, traditionally, retirement accounts have seen steady growth over time. But what I found in the alternative space, Sanjay, is that people are looking for real diversification. They're looking for other ideas on how they can grow their retirement. And so I'll just finish by saying, a lot of folks will be familiar with this on this episode or on this show. But, real estate is a really, really popular asset class that people love to invest in with their retirement funds, as well as their personal funds. However, there's a broader range of asset classes that people like to invest in with retirement dollars. I think right away about precious metals. That's actually an asset class where a lot of individuals like to invest their personal funds, but also their retirement funds as a hedge against inflation. And there are self-directed retirement accounts that are designed to actually custody physical metals. And there's a process behind it. We could break that down with each individual, but people like that peace of mind knowing they can actually hold precious metals. We have clients that do a lot of private money lending, and that could be viewed as like short-term investing. So, the list does go on and on. Notes, venture capital, and then, of course, digital assets, Bitcoin and so forth, cryptocurrencies. So it's becoming a popular topic. It's becoming really popular amongst investors as well as people who are raising capital and managing investment funds. So I'm excited to dive deeper in this today.
Yeah, no, you made a very valid point earlier, Joel. I remember when I was having my W-2, and there was this engineering manager and her husband. They both were in the same company. They wanted to retire, and guess what had happened? The market had actually crashed, which takes down your 401k with you, right? So it was so bad for them. They were like, man, we wanted to retire, but it now looks like we'll have to continue working for several years, because they had thought in their head that they had enough money set aside in their 401k that would help them retire sooner, which unfortunately was not the case. So how does someone qualify for a solo 401k, and what are the advantages of solo 401k? Like, why people do these things?
Yeah, for sure. Absolutely. So as far as the solo 401k is concerned, right away, just to differentiate that type of account, there's probably, 8 different types of retirement accounts an individual can actually leverage on the self-directed side. You just hit one of them right on the head, the solo 401k, and that's a really popular self-directed retirement account for people who are small business individuals. So you hear about self-directed IRAs. Those are probably more common because ultimately every individual could qualify. However, the solo 401k was created years ago, and there's IRS publication that basically states, okay, if you're a small business individual, You are the only employee as the owner. You don't have any W-2 employees outside of yourself or even your spouse. There's actually a provision that allows you and your spouse to be employees of this business to qualify for a solo 401k. So if you're listening right now and you're thinking, okay, what is this solo 401k? How does it apply to me? You've got to be that business owner who's really the sole W-2 individual. You might have some contracted employees. Maybe you've got a couple of contracted assistants. Maybe you've got like a contracted marketing expert and whatnot. But fortunately, in that situation, if you are just the only W-2 individual, you can qualify. And why this type of account is so significant for the small business individual is it does a couple of things. It's a tool for their retirement and tax strategy, but it can also be a tool for their existing retirement funds. Let's assume I'm turning 40 this year and I'm W-2 and I've contributed to my company's 401k over the last 20 years. But then I decide, you know what? I've built some strong skills and I want to go out on my own and I start my own business. What I could actually do is qualify for the solo 401k and create one with a firm like Heritage IRA. Then I could take my 20 years worth of W-2 401k contributions and earnings, and I could either roll over a portion of that or I could roll over all of it if I wanted to into my newly formed solo 401k. And then from there, I now have flexibility. I can invest it in alternative assets, just like what you're familiar with and what you offer, Sanjay. So if there's a commercial real estate opportunity that I want to participate in and I want my retirement dollars to grow differently, boom, I can knock that out right now. I could invest in that asset with my retirement funds in my solo 401k. And I'm telling you right now, like I said, it's becoming more and more popular. So you've got these fund managers, investment sponsors who have opportunity right there in front of you. They know how these solo 401ks function. A lot of them have one, or at least they have a self-directed IRA. So when they open the offering to the individual like myself, who's now 40, running a solo 401k, they're going to see me as an investor with my solo 401k and they're going to scoop me up and say, absolutely, we'd love to have you as a limited partner and your solo 401k as the investor. So that goes a little bit further than the eligibility, but just to summarize eligibility, you have to be a small business owner. And you have to be the only W-2 employee in this instance to actually self-direct and invest in private placements.
Okay. So you say, for example, there is a dentist, right? And they have their own office. Obviously, they're not, obviously, you know that dentists don't work 5 days a week. Most of the time but they also have employees who come in. Now, when most of the time what happens is all these employees don't get any benefits, right? But then because a lot of these guys are part-time employees kind of a thing, they're not full-time. So for example, most of the time they've been told that if a dentist wants to do something like this, like they cannot have an actual 401k, but they would like to have an IRA kind of a thing that they put together, but they have to do the similar thing for their employees who've been there for more than 2 years or so.
Yeah.
So the solo 401k that you're talking about, is that something that they can only keep it for themselves and not have to do any kind of, give that as a benefit to their, because according to the IRA's perspective, they are supposed to compulsory make an offer to these guys, and if they do choose to take up on that, they do have to contribute towards it as well, like 2 or 3%
Yeah,
as a match. So with
that's
the
right.
401k, you don't have to do that.
You've got really, really good points that you've brought up that I think a lot of your listeners are very curious about because they are in that position. I'm a small business individual, but I've got employees. There's a lot of safe harbor rules that come into play with qualified plans that the small business owner wants to participate in. And you're right, if they have eligible employees within their firm, they have to offer the same value or same benefits that they want to take on as the small business owner to those that qualify within their organization. And that could create some complexity. There's a third party administrator record keeping that has to come into play there. And most most instances, there are individuals who actually have a 401k designed for their company and their employees. The only caveat, or I guess maybe disadvantage with those types of accounts that I'm referencing, they only allow the participants to invest in the stock market. Maybe there's a variety of funds that have been developed for that group of participants. However, there is a solution for small business owners that want to provide value or resource to their employees, but also have flexibility as the owner to go invest in alternatives. So again, solo 401k is called a solo 401k for a reason. It's for that one owner employee participant. So let's go ahead and just take that option off the table for the business owner who has multiple employees. And let's start exploring the alternative, which is the SEP IRA. It gives that small business owner the chance to make contributions to their employees, to their own plan, and then ultimately turn around and invest those contributions themselves in alternative assets. So we have a lot of medical professionals that fall into that category. They want to self-direct, they want to invest their funds in alternative assets, but they do have their W-2 employees they have to consider. So the SEP IRA is a really good alternative.
Got it. Got it. Okay. No, thank you so very much. Because a lot of my listeners, you will notice, are and our investors are healthcare professionals, and they have their own practices and so on, which is where the question came from. So I thought, okay, this would definitely help them a lot.
There's
So,
some caveats I want to throw in there, Sanjay, while we wrap up what you just brought up. There are some instances where if your small business professional who is a medical professional listener right now, who might actually be a partner in a business, maybe they're not 100% owner of this practice, but maybe they're 50-50 with another partner. That changes things for that small business medical professional. So if there is a partnership, that actually creates eligibility for that small business owner to participate in the solo 401k because they're no longer 100% owner of that practice.
okay.
So we could dive deeper one-on-one with anybody who's listening right now that just raised their hand and said, wait a minute. Yes, I'm a medical professional and a small business owner, but I'm a part owner. I'm a partner with my colleague. And maybe that looks like 50% or 60-40, whatever that might look like. Let's have a dialogue so that we could dive a little bit deeper into the percentage, what the control group percentage looks like, maybe across some of their other businesses, what the employees look like. And now that person listening right now could very well be eligible for the solo 401k, which is a very hot self-directed retirement account. Wanted to throw that in there to make sure that we cover that as well.
No, absolutely. No, thank you so very much for that. So let me ask you this question, Joe. How many types of self-directed retirement accounts are there?
For sure.
Um, you know,
Let's dive into it.
yeah, go ahead.
Yeah, I was going to say we've discussed the solo 401k. We even piggybacked on that and we talked about the SEP IRA. You also have the simple IRA, and those are really designed. They're IRAs that are designed for small business individuals. And contribution rules apply to each one differently. I think what I want the listener to walk away with, instead of diving into each one and having them try to memorize all the differences, just know that there is a variety of types of contributions. There's maximums. They change year over year. The maximums are always also based on earned income, net income for the business. There's some percentage thresholds as well of how much of the net income can be contributed. So I don't want people to get too hung up on what those contributions limit look like, but we'll have that discussion one-on-one when we drill down the specifics. So we've got the solo 401k, the SEP, and the simple IRA. We have the traditional IRA, of course, which is designed for pre-tax funds. It's probably the most common self-directed retirement account. Most individuals are rolling pre-tax dollars from an old plan into the traditional IRA. We have the Roth IRA, which is ultra powerful in the sense that now you're investing retirement dollars that are essentially, they've been taxed and they can earn tax-free money at distribution. We can dive into that some more. We have people that convert from traditional to Roth as well. And then there is also a plan called the ROBS plan, which stands for Rollover Business Startup. And that is designed for the individual that is looking to start up their own company. Kind of going back to my hypothetical where I've been W-2 for 20 years and I'm ready to start my own business, if I was looking for sources of funding, I could lean on my W-2 money that I roll over to a new plan. So Heritage IRA, we actually have this plan created, as well as the software or the user interface that a client who, like myself in this hypothetical, will want to use to manage my ROBS plan. So here I go. I'm ready to invest my own 401k money in my own business. I start up a C Corp so that my ROBS plan can essentially invest in shares of my new business. And that's essentially how it operates. I'm allowing my own 401k money to invest in shares of my newly formed C Corp. So it's a benefit to me immediately because now I have all of this working capital that I could leverage for my small business. And then secondly, it's also an active investment for my retirement dollars. So I'm growing the value of my retirement dollars at the same time. Now, I will say this, if I'm starting up my business, I'm going to look at all sources of funding, right? I might go SBA. I might even do some private borrowing. I have to consider all of that as I'm exploring the ROBS plan because the ROBS plan could make me ineligible for SBA lending, or maybe when I jump into it with my ROBS plan and I want to go private borrowing, maybe the private lender doesn't want me to necessarily do business with them because I've got so much invested through my ROBS. Those are all just like hypotheticals, but it's important that the small business owner listening today that wants to go out and start their business, they know they can do it, but they just need to make sure they do all their research before they jump in.
Got it. So how does this? I know you kept using the word rollover. So how does this rollover work, and then who controls it?
Yeah. The rollover is probably like step one anytime somebody wants to self-direct. So typically what happens, we've got a listener today or an investor that is really curious about doing this. They have to create the retirement account to kick it off. And that's where we come into play. That doesn't take really any time at all because everything is so automated these days. We can have a newly formed retirement account for the client within 5 minutes.
Oh, wow.
Yeah, so it's really, really fast. From there, a company like ours, we have a team that supports the whole rollover process because we never want a client to have to experience or deal with that on their own. We've found in the industry that that's a big pain point for investors. They almost want to walk away from the opportunity when they learn that maybe they need to do it themselves. And that's not the case with Heritage IRA. We do really the whole process. And what that looks like is if our client had 401k dollars at Fidelity IRA that they were rolling over, we would approach Fidelity IRA as Heritage IRA, and we would let them know that the client would like to move their funds via direct rollover. And it's critical, Sanjay, that we articulate this is a direct rollover so that we don't create a taxable burden for the client. We never want to distribute those funds, even though we're going to try and put them into the new plan, because it would create that taxable event. So we work with the releasing custodian hand in hand, and it's a really simple process because for the everyday individual, they don't realize that this is happening thousands of times in our nation within, a variety of IRA custodians. Funds are being moved all around. So we do that heavy lifting. We move the funds from, again, Fidelity IRA as the example. It takes usually about 7 to 10 days for that process to finalize because there's just so many steps for the custodian to go through to finalize the process. No work on the client's part, the person who's actually saying, I want to do this. There's really no heavy lifting on the client's part, but we always like to say, prepare for those 7 to 10 days because that could sometimes, Sanjay, make or break an investment. Let's just say, Sanjay, you're raising capital for an opportunity, or maybe one of your partners are, and you've got a client that wants to invest with self-directed retirement funds. They need to jump on the bandwagon pretty quick and connect with us as soon as possible if they know it's something they want to do, because we need that lead time so that we can make the funding deadline. But we're working hand in hand with the client, hand in hand with the releasing custodian. And I would almost say most importantly, we're always working side by side with the investment sponsor. our investment sponsors love us because they're hopeful that we will step in and make that whole process easy because they're busy doing their capital raising. They're busy doing their own administration. We would never want it to be cumbersome. And that's what we've done at Heritage IRA. We're veterans in the industry and we've designed a process to make it as simple as possible.
Got it. So now that the rollover has happened, they're, within 5 minutes, as you said, they already have their self-directed IRA. The funds have got moved. Um, what happens to that fund? Where does it stay till it gets deployed?
Oh, such a good question, Sanjay, because there is a misunderstanding that sometimes, okay, a client wants to do this, they roll over their funds and they've yet to find their investment. They might assume that those funds sitting in their newly formed self-directed IRA are somehow growing. They're not. These self-directed retirement accounts are designed primarily so that you can deploy the capital as soon as possible and start growing that. Whereas let's just assume we roll over $100,000 for a client that's really interested in self-directing, but they just don't know yet where to invest.
Mhm.
We can do that for them. We do that quite often, especially if they know that there's something on the horizon. We'll roll it over so it's ready to go. Maybe a month goes by, but then they pull the trigger and now it's invested. But if they leave it there for an extended period of time, it's sitting in an account that earns zero interest. It's not invested in mutual funds or anything like that. So if you're listening today and you're thinking, yeah, I want to do this, start looking for your investment, your alternative investment. And I always like to say this. I actually had a dialogue with a client yesterday, and they said, Joel, I'd love to do this. I really see the value. I don't know yet what I want to invest in, but I want to get started. I said, no problem. We could actually get everything established. That costs $150. And at least it has everything open and active so that when the client raises their hand and they say, I'm ready, it just is a quicker process. We've already knocked out a lot of the administration. So we just go straight to the releasing custodian, knock out the rollover, and then register the newly invested asset.
Okay. No, that's great. So, that was a great explanation because I know that a lot of people think that, okay, hey, they've kept their money somewhere else, but it's not, they think in their head that it's going to get them something, but the answer is no.
Right.
But the next part of it is, okay, they made that investment now. Now you got to figure out what is called as record keeping, right?
Yeah.
So what kind of record keeping is necessary for this and who takes care of it?
Yeah. I love that question. So let's just say 8 out of 10 times, most individuals are going to invest in an alternative asset with a self-directed IRA. In that case, everything is really left up to the custodian to ensure proper record keeping, accurate compliance, and just good faith in the process. We're a regulated firm. We're a trust company, so we're chartered, which means there's regulators that have very, very strict checks and balances. And in order for us to keep our charter, in order for us to stay in business, we have to have really good protocols. Fortunately for us, our operations team comes with a lot of experience. Like I mentioned, we really are the veterans in the industry. And so we have good checks and balances to ensure that all of those standards are met with the self-directed IRAs that custody assets. There's some record keeping and form filing, but fortunately that's on our books, as well as the form filing to the IRS, the 5498. We send that out every single year to the IRS to ensure accuracy and compliance and minimize any chance for an audit. The solo 401k is a little bit different. The solo 401k, like we talked about, is designed for the small business individual, but one thing that they have to consider is they administer the plan by themselves. And that's kind of been a little bit of a pain point in the industry because that's a big burden. You've got a small business individual who is already so tied up in their business and as well as their family or their personal life, they don't want another thing to really overburden themselves with. However, what we designed and what we launched this year is a user interface, like I mentioned, that allows the client to accurately record keep and maintain compliance with their plan. I'll just give two examples of this. So I like to compare it to TurboTax. I would only imagine a lot of people have used TurboTax in their lifetime, and it's kind of a plug and play process. You are asked a question, how much money did you make? Oh, well, you plug that in, it populates, the necessary information. How many deductions do you have? Do you have children, dependents, etc. You plug all that in, and it records everything nicely for you so that when you're ready to file, it's done accurately. That's really what our user interface looks like. So it looks really friendly to the user and it's really simple to navigate. And we want it that way so that if a client is asked, how much did you invest this year? Oh, I invested $100,000. Do you have a K1? I do. Yeah. Here's what it looks like. Here are some of the details you're asking me for. They plug that in and we do all of the record keeping for them. So now they have a great place that they can go back to, populate the data that they need. If they were ever audited, heaven forbid, with their solo 401k, at least they can substantiate everything that they've done right and they're not missing anything. It's like that step where TurboTax does a review. And if they notice that maybe something was missed, they'll force you to go back and fill it out. And then I'll just top it off with the fact that at the end of the year, not even at the end of the year, but rather every year, mid-year, there's a form that needs to be filed. It's a compliance form. It's the 5500. We'll actually spit out that 5500 for them so that they can review it and sign it and mail it. And there's not going to be any errors because, like I said, we've gathered all of the appropriate information. That software was built and designed by IRA veterans in the industry. So there's a lot of peace of mind for the user when they leverage that software.
Nice, nice. So that's good. You
Yeah.
just keep it very simple and nice. So I have a question. So when I had my W-2 and I had a 401k plan from my W-2, right? There were times when if I had to take a loan, I could borrow money against it, and then it would get paid through my salary and so on. When you do something like this, whether it is a solo 401k or you have self-directed IRA, they always say that you cannot use that money for your own personal investments or your personal thing. But is it possible if somebody does something like this to take a loan against it or borrow against it?
Absolutely. So there are some rules, right? You cannot invest your solo 401k dollars or your self-directed IRA dollars with anybody in your direct lineage, which would include myself. If I was operating, let's say like a 10-plex syndication with a couple of other limited partners, I actually would not be able to take my solo 401k funds or my self-directed IRA funds and be a direct investor as a limited partner in that opportunity because I'm running it. I'm the operator. So that would be considered prohibited. But I would say a great workaround. It's not even a gray area. I mean, it's set in stone that you can borrow from your solo 401k, just like you mentioned with a regular company 401k. That same provision applies to all types of 401ks. So we do have a lot of clients that first are eligible for the solo 401k. And then they decide, you know what? I need $30,000 of working capital or for like a remodel on a home. And I do not want to go through underwriting with a home equity line of credit, or I do not want to, secure that with a 20% interest rate. So what they can do is they can go straight to their solo 401k. And let's just assume they're on that dashboard I was telling you about, that software. They'll go over to loans, click on loan, and it'll spit out all of the guidelines right there. You can take X amount of dollars based on your balance. This is what your term has to look like. So we will make sure that the client who wants to borrow is following the rules and ultimately is recording the payments. So it's super simple. Prime plus 1% is the rate. You're paying yourself back. You're not paying us or anybody else. So it's a great way to grow your balance. You can actually borrow those funds up to 5 years, monthly payments, quarterly payments. So it's a great tool that I've seen many people leverage that. I've seen people who want to start a franchise. They'll actually use the personal loan provision to pay for some of the franchise costs as a franchisee.
Oh, yeah, this is news. I did not know about that part of it. So that's great because I always looked at it from like, oh, if I really need it, I cannot use it. Yeah, I can invest in somebody else's, but what if I need it, right? So that's a really good one. I learned something new today.
Yeah,
So now you buy these assets and everything. Can they convert that in kind?
they can. So I love that you brought that up because there are tax strategies like the discounted Roth conversion that would actually, and I'm not, a tax professional, but this is happening all the time in the self-directed and even non-self-directed investment space. Individuals, they'll have assets valued. Let's use a hypothetical where I've invested in a piece of real estate as a limited partner, and my capital investment was $100,000 of pre-tax money. And, I went through the whole process of rolling over my pre-tax money into a self-directed IRA, made that limited partnership investment. And as I'm talking with my CPA, it just happens to make sense to have that asset converted. And what I mean is literally take the 100,000 limited partnership investment and convert it from pre-tax to Roth. And of course, with every conversion, there's going to be some form of taxable burden because you have to pay the tax on it. But there's value in doing it this way because A, I know that my $100,000 is going to grow and
Right.
I want it to grow tax free. And I want to just keep doing this over and over again so that once I reach 59 and a half and I start distributing, those distributions and any of the growth or the earnings are tax free. The good thing is with the discounted Roth conversion, I'm having that conversation with my CPA. It makes sense to do the conversion. I get my limited partnership valued, and it happens to come in much lower than $100,000. That happens all the time, and they call that a discounted Roth conversion. So the reason it's so powerful is now I'm essentially converting that asset at a lower value than my $100,000 capital investment. So it's such a powerful tool. I can't tell you how many people are doing that.
Oh, wow. So, yeah, no, there is so much that we are learning, but I know that we're almost coming close to, the end of it. But um, how does Heritage IRA work with someone like us, like Blue Ring investors, and our investors?
Yeah. Our primary objective is to ensure accuracy with the whole process, the whole onboarding process. So we want to make sure that we're doing it right from top to bottom, that we're compliant, that we're not skipping any steps just to try and make it easy for anybody. So that's our foundation. And it's mainly because we've seen a lot of hiccups in the industry that we want to just completely eradicate from our business model. So first and foremost, you can have peace of mind knowing if you want to step into this, we make this as compliant as it can be. Secondly, we like white glove service. That's something that we offer in the industry and that we can actually afford to provide. So we like to be very hands-on and one-on-one with the client. If we're working with you, if we're working with your investor community, we want to make sure that everyone is in the know during the process. There's nothing more frustrating than one of the participants of the transaction being left in the dark or not being given the information they need, even when it's challenging. Like, unfortunately, I've had instances where a rollover has taken 30 days, extenuating circumstances happens like once a year. But as long as I maintain contact with the investment sponsor, their team, the client, the releasing custodian, that's what people want in this industry. Those are the pain points that we're really trying to iron out and make easy. And then affordability. It's actually really affordable to do this. Some individuals might assume it's expensive, and it can be with some, providers. However, it's $450 for an individual to start year one, $300 per asset year two and beyond. So it really is totally accessible, especially in our industry where maybe earnings don't show up for the first year, second year, maybe there's a pause on earnings. It's less painful when they have to, run their card for only $300 that year, knowing that the upside is on the horizon or right around the corner. So I would say those are the three fundamentals of what we provide.
Lovely. So, thank you, Joel, first of all, for sharing all this wealth of knowledge with our listeners. But if somebody wants to reach out to you, Joel, how can they reach out to you?
Yeah, easiest way to do this is just remember the company Heritage IRA. So that'll allow you to go to our website, heritageira.com. You can email me at joel@heritageira.com, or you can find me on LinkedIn. I'm really present on LinkedIn. And again, my name is Joel Landon. I'm really the only Joel Landon in the industry that if you look me up and you notice IRA, you'll find me. So Joel Landon is my full name. And again, please do reach out. Let's have a one-on-one conversation.
Yeah. No, thank you, Joel. I'm pretty sure a lot of them are going to reach out to you. I know there are a lot of investors that we have, as I said, are medical professionals who have their own business, probably would not able to. I don't think they knew that this could be done, whether it is a solo 401k or the self-directed IRA and how it could be rolled over, whether it is for their own business or even if they want to make an investment. So thank you so very much for your time and educating us on this. So with
You're
that,
very welcome. It was a pleasure.
no, thank you.